All right. So what I got pulled up right now is the SEC filing of Coinbase, and these are the financial documents they give to investors in the SEC. Shows how many shares they've got public, and this is kind of the technical breakdown a little bit of what is going on with Coinbase. So they want to create an open financial system to the world. Pretty noble view of Coinbase. Our vision: more economic freedom for every person in business. So these, it's just kind of fluff. Monthly transacting users 2.8 million, verified users 43 million, so like a fifth of the United States. Just kind of some screenshots. All right, so we got 456 billion lifetime trading volume, and then 90 billion assets on the platform. So that's actually pretty good. If you look at this, I'd say that's a good portion of people that are like holding things on the platform. Like it'd be bad if you had a really high top number of lifetime trading, and then you had a really low number. So it's good that people are actually storing a lot of money in the system and viewing it as not just a trading vehicle, but it's something to hold. It's got all these. If you really want to learn a lot of the terms, it's got a lot of cool terms broken down. Mining network protocol. If you're having trouble understanding what it's talking about, nodes. There's a lot of really technical jargon within the Bitcoin crypto space. This is Mr. Brian Armstrong, looking good in that chair. His bald head. Kind of outlines kind of his long-term thinking. If you really want to hear his mentality, he's got a kind of a letter to shareholders. Let's see. This is just a long document that you can really like analyze and break down. You've got revenue right here. This is 2019 and 2020. Essentially more than doubled revenue, which isn't surprising. People had a lot of stimulus money and sitting at home, really delving into this kind of stuff during the pandemic. But they literally went from 482,000 revenue to 1,141,000 in revenue. Let's see, over a year. That's pretty amazing. You can see why people are just kind of like blown away. That's net revenue. Let's see. Operating expenses. Their revenue went up a lot faster than their operating expenses went up. 82,000 to 135,000. I like to see technological and development went up about $100,000, 185 to 271. Sales and marketing, it doubled, but not going up crazy. Like a lot of it kind of marketed itself. You're going to have, let's see, total operating expenses went up. Operating income loss. So they went from losing 45,000 on an adjusted basis in 2019 to being positive 408,000. So they actually have a PE ratio now, which is good. Like a lot of companies nowadays don't come public with a PE ratio. And then other income, I think that is some more speculative bets they're losing money on, but losing less money on. Net income loss. You see there, that's them losing money, and that's losing 30,000, and then being $322,000 positive. So their financials drastically improved from 2019 to 2020, but I mean, you do have to keep in mind that Bitcoin had a bull cycle in 2020, and really took off. There was a lot of money printing. So, this is a company where it's going to be a lot of ups and downs, and you really just got to believe in like what they're doing, or just admit that you're a trader. And this isn't a trading podcast, so you should probably find another podcast. Adjusted Ebitda was 24 million in 2019 and 527 million in 2020. Verified users went from 32 million in 2019 to 43 million in 2020. Their monthly transacting users almost tripled from 1 million to almost 3 million. Assets on the platform, bam, 16 million to 90 million. Yeah, 90 million in 2020. No, 16 billion to 90 billion. I'm doing bad math calculations. Now, risk factors, they highlight some things that could be risky to their company. Dependence on offerings that are dependent on crypto asset trading, including trading volume and the trailing trading prices for crypto assets. Ability to attract, maintain, grow our customer base and engage our customers. Changes in the legislative or regulatory. So definitely, that's one of my biggest ones, is worry about what the government's going to do. Whether it's going to try to shut all this down. Turkey just banned the exchange of crypto as a currency. Who knows what China could do, or Russia. Regulatory changes. Ability to diversify and grow our subscription services revenue. So I think they definitely know they have to get away from the fee-based model. Pricing for our products and services, whether that could get driven down like Robinhood drove fees down in traditional investing. Investments we make in the development of products and services, as well as technology offered to our ecosystem partners. Adding and removing of crypto assets on our platform. Macroeconomic conditions. Adverse legal proceedings or regulatory enforcement, development and introduction of existing and new products and services by our competitors. So notice they're way more focused on regulation of the government than they are their competitors. They seem pretty confident in their ability to deliver, compared to they can't control the government that much, and what their policies become. Nation states are a powerful thing. Increases in operating expenses that we expect to incur to grow and expand our operations, remain competitive. System failure outages, including with respect to our crypto platform and third-party crypto networks. Breaches of security or privacy. Luckily, this company focuses on security and privacy a lot. That is something he stresses a ton. Inaccessibility of our platform due to our third-party actions. Our abilities to attract and remain talent, our ability to compete with our competitors. And you know what? This guy, if anyone's going to attract and retain talent, he gave $25,000 worth of stock to each of his employees right before this IPO. And it's gone up since IPO. So there's he really, even just kind of lower rung workers got a lot of stock in their company. And I really like a CEO who shares the bountiful blessings of a company with the workers, because I think a lot of CEOs can underestimate how important it is to have a really good team and attract the best people. And I think that's really when you start seeing a company go downhill, is when they are focused on the growth and stuff, but they neglect their employees. And in this space, the space is moving so fast. They really need to pull the best people in the world to be on their team, and really giving them a share of the company's growth is going to go a long ways in that. You guys can look this up. This is sec.gov/archive. I'm not going to read this whole thing. Look up Coinbase SEC filing, and you can look through that. And then there's investor presentations on their website. If you go down at the bottom of their website, they should have an